So are you ready to learn about support and resistance? Because I know I am. This is going to be a fun 5-part series. So let's get into the video. Mastering support and resistance, part 1. Now this is going to be a 5-part series, and part 1 is going to be classroom work. It's theory work, understanding why support and resistance happens. Because when you go over to the charts, you need to be able to understand what you're seeing and why it's happening. Okay, so part 2, 3, and 4, and 5 in this series is going to be the practical side. We're going to jump onto the charts, so we're going to cover everything I've showed you in today's video. We're going to see it happening live. We're going to see how price reacts at these levels, and hopefully you'll get a better understanding of what you're seeing and why it's happening. So get your notebooks down, take notes, grab yourself a beer or a cup of tea or anything like that, okay, because today is all about classroom work, okay? Now, before we get into this video, I want you to forget everything you have been taught so far. When it comes to trading, there is no right and wrong way to trade. There is no right way to teach people to trade. Everyone has different trading styles. People will teach people in different ways, and it's normal. People will call support and resistance different things, institutional levels, perhaps a structural level, whatever. Okay, and there's no right and wrong way of trading it, you know, because there's different styles of trading. You'll see an uptrend, and you'll see traders want to buy that uptrend, and you'll see traders want to sell that uptrend. It's normal, okay? But what I want you to do is forget everything you have been taught up to this point and just start fresh. So take note of what I'm listening. We're going to implement it on the charts together, and I want you to practice, simulate it, and over time you'll be able to get the same success from me, which I've been doing for the past 7 years. Now, the reason why I say that is because I've taught thousands of people, and a very big problem is traders will join me and I don't know their background of what they've been taught or what they've learned. You know, I'm a very simple trader. I'm like, keep it simple. This is what we're looking for. And yeah, when you see that happening, take a trade. And that is when a trader will go, well, I've been taught this way, or you know what, if we do this or we change that, it's going to give better. What you're doing is you're changing. You're not disciplined and you're not following a mechanical set of rules. So what I want you to do is just forget everything. Just do what I teach you in today's video and the next 5 series, and believe me, you will see massive progress. So forget everything you have been taught. You are a beginner now, okay? Now, supply and demand, support and resistance. Now, when it comes to trading support and resistance, people are going to call it different things, perhaps a structural level, institutional level, retail level, supply and demand level. Now, believe it or not, supply and demand and support and resistance levels are 2 separate things. Okay, I'll cover it in the next video, but for the purpose of this course, I'm going to call it the same thing. Now, the reason why I'm going to call it the same thing is because it keeps everything simple and less complicated. It's going to save questions like, when does a supply and demand level become a support and resistance level? When does a support and resistance level become a supply and demand level? If I see a support and resistance on the 5-minute, is it actually a supply and demand level on the 1-hour time frame? Okay, these are questions are not going to be asked now because we're going to call it the same thing. What I want to teach you is able to see the structure on the charts, seeing price reacting from that structure and then profiting from it. What you call that structure, really don't care. You can call it whatever you want, right? What I want you to be able to spot is that structure itself and being able to profit from it. What you call it is up to you. So for the basics of this video, to keep everything simple, we're going to call supply and demand, support and resistance the same. I will cover it in another video, the difference, but we're just going to keep it simple. Now, like I said, everyone's got different styles of learning and trading. Everybody has their strengths and weaknesses in trading. I have my own strengths and I have my own weaknesses, and that's the same with you, and you need to understand that. Everyone has different learning curves, okay? Some people are going to easily spot structure and some people are going to struggle with it. It's normal. Okay, so don't worry, don't be frustrated. The more you spend on the charts, the quicker and easier your trading is going to come. A lot of people have this theory that you can chuck a lot of money at trading and it's going to speed up your learning curve. Unfortunately, it doesn't. The only way you're going to speed up your learning curve is to spend more time on the charts. Spending time on the charts is priceless. The difference between an experienced trader and a beginner is the amount of chart time they have. You can't chuck loads of money at that and think you can skip that part, because unfortunately you can't. Okay, so the most important part is spending time on the charts. Now, retail versus institutional. When it comes to trading, we need to understand who is ultimately moving the market. Okay, now the foreign exchange has $5.3 trillion traded through it every single day. Now, how much of that do you think is retail and how much of that's institutional? It's on average around 90. Oh, hold on, I've gone previously. There we go. It's out on average around 98% is institutional, 2% is retail. Okay, so the banks and institutional companies are ultimately moving price. They do not use stop losses. Institutional and banks rarely use stop losses. The reason being is because they have enough capital to be able to move the market in their favor, in their direction. And we want to be able to see that direction as well and profit from it. Now, there is a theory in trading that institutional companies and banks will take out retail traders. You know, they'll drive price away and they'll take out retail traders deliberately. Now, I actually don't believe that's true. Okay, the reason being is because 98%, which is institutional money, are not really focusing on the 2%, which is retail money. I just don't see that logic in that, okay? If $5.3 trillion is traded through the foreign exchange every single day and 98% of that is institutional money, I don't really think they're bothered about retail money. If you do not understand how to trade like an institutional company or see which way they're trading, so give an example here, if price is in an uptrend, we want to trade with the trend because that's where the order flow is. That's where these institutional companies are driving price up. Now, if you're in the way of that and you're trading against the institutions, then yeah, you will get stopped out. Okay, it is a given, it will happen. So we need to be able to trade like an institutional. But I don't believe that institutionals are deliberately taking out retail money. I just don't believe it's true. Okay, but we need to understand which way these institutions are trading. Okay, learning about which levels to trade off. Now, like I quickly mentioned here, trading with the trend. Okay, support and resistance will get broken. Okay, it's not a calculated formula that will always work. Support and resistance doesn't always work like that. Okay, if support and resistance just 100% worked all the time, price would be ranging off the 1 minute time frame. It just would be stuck in a range, bouncing off support, bouncing off resistance. Okay, it's got to be broken. If support is being broken, there is a reason why it happens. Okay, and we'll cover in this course on why it happens, okay, on how we know when a support level is going to be respected and when it's not. Okay, understanding order flow. Okay, now order flow is pretty simple. Okay, it's the direction of the orders in the market. So if price is in an uptrend, okay, it means there's a lot of buying pressure in the market. Okay, so basically order flow means which way are the orders flowing. Okay, the direction of a currency pair. So if it's an uptrend, then there's going to be a lot of buying pressure from institutions buying price up. Okay, and how does the market move? We're going to cover that now in the next slide. We're going to cover about how the market really moves, and yeah, hopefully you will get a better understanding. Okay, welcome to my, I was going to say whiteboard, but welcome to my grey board. So let's have a quick introduction on how the foreign exchange works, how support and resistance works, and then we'll finish off with a live example on the charts. Now, how does the foreign exchange work? How does it constantly go up and down like this here? Now, the only way you can move price is if you buy it and sell it. It's the only way you can move it is if you buy it and sell it. So if price is in an uptrend or currency pair is in an uptrend, a lot of people are buying it. Okay, if price is in a downtrend, then a lot of traders are selling it. It's the only way we can move price is if we buy it or sell it. A lot of buyers drives the price up, a lot of sellers drives the price down. Okay, now so there is another way, and that's market manipulation. That only really tends to happen or with your broker. Okay, if you're perhaps trading on a MT4 platform with an unregulated broker and you're winning all the time, they will manipulate price on their platform so you lose trades. They're not actually manipulating price in real time. They're only manipulating price on your particular platform so you lose the trade. Now, if brokers do that, and they do that often, then obviously they're breaking their own regulation or license if they are regulated, and they'd probably get negative reviews on Trustpilot, and realistically it's not really worth doing. Some brokers do it. They used to do it a lot back in the day with white label brokers, especially if you trade binary options. But realistically, it doesn't really happen a lot now unless you're using a unregulated broker. Now, real market manipulation on real price, meaning when institutions drive price up to perhaps take retail out and drive the price down, yes, that does happen, but there has to be a reason why it's happened. Because remember, the only way you can move price is if you buy it and sell it. So for an institutional to buy a currency pair, they've got to put a lot of money on the table to drive that price up and then drive the price down. So yes, market manipulation does happen, but they have to have a very good reason to do it, because they've got to put their money on the table to do it. Now, if I'm a retail trader and I get took out and I lose my money because of an institution, my money doesn't go to that institution, it goes to my broker. That's why I say market manipulation doesn't happen all the time, okay? Because it's not, for me, it doesn't make sense why 98% of the institutions that are trading would want to take me out, because if I lose the trade, it goes to my broker, it goes to them. But it does happen, okay? And we'll cover that throughout the series. Now, like I mentioned, price will only move if there's a lot of buyers and sellers, okay? And there is always a theory out there, it's a logical theory, that there's always equal buyers and equal sellers. So if we've got 5 sellers here driving the price down, that means there has to be 5 equal buyers driving the price up, okay? Because each one of them matches up to each one of them, okay? There's always equal buyers, equal sellers, either side of your trade. Now, I, again, don't believe that's true, because price would then cancel itself out. If you've got equal buyers and equal sellers on both sides, price doesn't really move. And vice versa, if you had 5 sellers here, okay, I'll give that a better example. I'm terrible at this. Obviously, as you can see, art wasn't my perfect skill. Okay, if you had 5 people selling and 2 people buying, again, that wouldn't work, because if you line up the buyers and sellers, it means there's 3 traders here unable to execute their trades. There's nobody on the other side of that trade to be able to take that position. So again, that theory doesn't work. Now, what there is, and yes, there is truth in the matter when people say there is equal buyers and equal sellers, but it doesn't quite work like that. There is somebody here called a market maker. So a market maker is basically like an institution or a broker, okay? A broker will buy and sell from anybody, okay? So if you take a trade, that broker, that market maker will buy from everybody, and it will sell to everybody too, okay? So it will match up buyers and sellers. So yes, there is logic with the saying there is equal buyers and equal sellers, but there is a market maker in between that. A market maker will make their money in the bid and ask, and also the spread, okay? It will basically, you can sell as many times as you want to a market maker, and that market maker will then sell those sell those trades to the buy traders that want to buy, okay? So always at the other end of your trade is a market maker, okay? Now, there is something as well called liquidity and imbalances, okay? And it's, again, to do with supply and demand. If there's a lot of demand at certain levels, then market makers, brokers will offer a lot of supply, okay? So we can go into it in a little bit detail, but I won't, because again, understanding that side of trading is really irrelevant. My job is to teach you to understand support and resistance, okay? Now, like I mentioned, support and resistance. Okay, the big one, the big finale, support and resistance. Okay, now when we see price coming up to support and resistance, okay, we know there's going to be a lot of sellers at this level. Okay, and like I just mentioned, if there's a lot of sellers at this level, there is going to be a market maker willing for everybody to sell to, right? That market maker is going to be like, yeah, okay, you know, I'll provide the trades, you sell to me, yes, I'm winning, right? Supply and demand here. Okay, there's a lot of demand at this level, and the market makers will come in and they'll supply those trades to the traders. Okay, now the most important part is here. Okay, this level here, we know when price comes to support and resistance, there's going to be a lot of activity. Okay, there's going to be a lot of traders looking to get into the market here, both institutional and retail. Now, institutional or traders out there are going to tell you that institutional is basically just going to manipulate price and take out retail. If that's the case, then we need to understand that both retail and institutionals are getting excited at these levels. It's these levels here where we want to be looking to take our trades from. Okay, now what we need to do is understand the order flow around these support and resistance levels. Let me give you a quick example of what I mean. Okay, so in an ideal world, price moves like this: trend down, there's a lot of sellers, price pulls back. Okay, the reason why price pulls back is because people start to take trade, sell off their position. So give an example here. If you take a sell trade here, right, and you've made 100 pips, what are you going to be doing here? You're going to close your position off. You made money, right? Well, if that happens then, right, there's nobody selling here no more. Okay, so price starts to pull back. And then again, traders want to start selling because they see the pullback. They think, yeah, I want to get into a trade, right? And again, price comes down like this here. This is a typical downwards move. Now, this is good on this grey board, but in reality, it doesn't always look like this here. You get something like this here. You get a downtrend like this here, and then price pulls back, then it comes down, then it pulls back, then it comes down. As well as that, right, you will also have micro trends on the smaller time frames. You'll have something like this here: price going down, then it comes up, then it comes down, then it perhaps goes up, comes down, comes up like this here, and you get this kind of messy pattern like this here. Now, what I want to be able to teach you is to be able to see these key levels here, and these key levels here, and these key levels here. Because these levels here are where the institutionals are coming into play. Here, here, and here. In between here, this is just retail money. Okay, this is just basically what you've basically got is a big sell-off here, right? And then everybody starts taking positions. And on the smaller time frames, this is an uptrend, isn't it? Okay, what you basically got here, if I just do that again, and I'll make it white, is you've got a downtrend, a pullback, a downtrend. Now on the bigger time frame, right, these are where you want to be selling here and you want to be buying here, right? But on the smaller time frame, you've got this basically small uptrend like this here, right? And what happens here is this is where a lot of traders or retail traders get trapped out, okay? Because a lot of retail traders here, they look at this and they go, yeah, this is an uptrend. Right, so I'm going to buy. Look, we've got a higher high. We've got a new high. We've got a new high. There's a lower high. There's a higher low. There's a higher low. So this is an uptrend. I'm going to buy the trend, and they start buying. They start seeing this uptrend, and then whack. Institutions come in, drive the price down, take everyone out, and go, well, you know, that's just market manipulation because institutions were always going to take it out. No, it happened because you didn't look at the bigger picture. Okay, and this is what we're going to do next. We're going to head over to the charts. We're going to basically show you an example of this happening, and yeah, I will see you on the charts. Okay, so we've learned a number of different things today. The first one is that the only way you can move price is if you buy it or sell it. It's the only way is if you buy it or sell it. So if we look at Euro USD here, it's in a downtrend. It means that there's a lot of sellers selling Euro USD. There's real liquidity, there's real money behind these candlesticks. Price is being driven down. Now, if all of a sudden Euro USD stops going into a downtrend and goes into an uptrend, it means that the pressure switches. Now there's a lot of buyers in the market. Now, stuff always happens for a reason. It's not just random probability, it's not just random moves. Everything happens for a reason. So if people or traders or institutions or retail start changing the price here and driving it up to an uptrend, there's a reason why it happens. There's a reason why all of a sudden the selling pressure has changed into buying pressure. And there's a reason why that happens. And as traders, we have to figure that out. Perhaps it's around structural level, support and resistance, supply and demand zones. There's always a reason why it happens. But there's real money, there's real liquidity behind these candlesticks. So that's the most important part. These candlesticks tell us the real story. The other thing that we need, or what we've learned, is that around structural levels, we'll get institutionals and retail entering the market. Now, you can have your theory and say that institutions are moving price to take out retail traders, but what we do know though is institutions and retail will get in at certain levels together. Okay, so we can use that momentum, that buying and selling pressure to take trades. Let me give you the example of what I mean. Okay, now if we firstly look at the 1 hour charts, what does it tell us? Which way is order flow? It's a downtrend. I mean, there's real sellers driving price down. Okay, so what are we looking for? We're looking for a sell trade because we want to buy or we want to sell with everybody else. Okay, remember 98% is institutional, so we want to be selling with the institutionals. Okay, now how do I know it's a downtrend? Simply by marking up the previous lows and highs. So there's the high, there's a low, there's a high, there's a low. Okay, so for price to switch into an uptrend, okay, we'd have to break the previous high. Okay, we haven't done that. So what I'd be looking for is a pullback, preferably around to this region here. The reason why I say this region here is because it's just a typical area where price has reversed from. You have to remember one thing, okay? If price suddenly gets reversed at a level, is a significant level. There's a reason why it happened. I mean, if price suddenly comes straight into a level and then reverses, that is a significant level. So on the 1 hour charts, we've had that significant level here. Okay, prices come down and rejected from it. We know that now, that this is a level, this is a price on Euro USD where price will react from it. Okay, so we could be seeing another reaction from this level. Could be a possible downward move. We are looking for a downward move, remember, because it's a downtrend. Okay, if we look at, and just to break it down again, just to keep it simple, if we look at, I don't know, USD JPY, what's happening on USD JPY at the minute? It's an uptrend. Okay, it's an uptrend. It means there's a lot of buying pressure. So if there's a lot of buying pressure, we're going to be doing what? We're going to be breaking support and resistance. So I'm just going to mark it up there. I'm going to mark it up here as well. Okay, I'm going to mark it up here as well here. Okay, so what's actually happening on Euro USD, USD JPY, is we had an uptrend. There's a high, price pulls back. And again, I'm just going to notice how price pulls back to this area here, this structural level. Okay, supply and demand, support, resistance, retail, institutional level, you know, call it what you want. Okay, and again, a lot of buying pressure from that. Okay, because it's an uptrend, we're going with the orders. Okay, it's an uptrend, price creates a new high, which is here, price pulls back. Again, there's still no reason why we wouldn't buy this at all. We start buying here and price drivens up, comes back up here. Again, we buy it, price comes up, and again, we buy it from these levels. Okay, it's a typical uptrend. Now, what's funny is if you zoom in here, okay, you've got this move here. Okay, this is a downward move. Now, this is going exactly what I said about uptrend, uptrend, uptrend like this here. And then in between these uptrend moves, you'd have the micro mechanics, the micro moves, okay? The downward trend here. Well, in reality, it's not a downtrend, it's an uptrend, right? This is exactly what's happening here, right? You've got an uptrend, but on the 1 and 5 minute time frame, the lower time frames, you've got a downward move. And what we need to be able to see is when institutionals come into play, and they come into play here. This is the key level we want to be buying from. You can sell here and ride the price down, and I will teach you in the next video. This is what lesson number 2 is going to be about. How to take trades into significant levels, and then we will look to buy from these levels. So win-win. Okay, the difference is you could perhaps get 1 or 2% against the trend on your account, and when you trade with the trend, boy, you can get some big money. Big 5, 10, 15, 20% gains. I've even seen 100% gains. Let's go back, let's get rid of that one there, and let's go over to the 1 hour time frame. Okay, and we're just going to press play on this here. Now remember, I'm looking for what? I'm looking for a pullback to this level here, okay? Because that's when I know institutions are going to get into play and start driving price down. You can see here, price is still going into a downtrend. We know that's happening because it's a downtrend, okay? So what I'm looking for is, like I said, I've still marked up my previous structure here. You can as well mark up this one just here as well, but I wouldn't really count this much as a pullback. This is not really a pullback. Price just went sideways, okay? The real movement was here. See how it went up, okay? Price went up. Okay, this is a significant level. I would expect price to react from this level again, okay, or I would expect institutions to come into play at this level here, right? Now you'll notice price starting to pull back, okay? Now we've come up to this level. Now this is the interesting part. This is the pullback in price, okay? If you go back to the 1 minute time frame, okay, let me just, Euro USD. Was this what I just looked at? Oh, it wasn't. Hold on here. Let's go back to naked. Okay, if we just look at Euro USD, okay? Now again, this is that typical move up, and this is where perhaps a lot of a lot of retail traders get trapped out, okay? You've got an uptrend here. So again, I'm just going to mark up all these levels here, okay? And you will see everything start to make sense, okay? You'll see everything starts to make sense, okay? Here we go here, right? So I'm just going to move that out of the way. I'm going to press play here. And again, okay, now remember, right, uptrend, we know off the one hour time frame that Euro USD is pulling back, okay? Off the 1 minute time frame, you've got an uptrend movement. And again, I mean, like I said, I could draw this all day long, okay? And we'll cover this in the next video on how to profit from it. So what we've basically got is we've got a high here, price break structure, pulls back, a lot of buying pressure here. Right, again, we know that because it's in an uptrend. Price breaks up, pulls back, not really any structure here, so I wouldn't really count that. Price creates a new high, there's the high. We're still above this structure, so a lot of buying pressure here. Now notice really, as if you go back to the 1 hour time frame, so we on the 1 hour time frame, we've come up into this supply level, okay, or resistance level, okay? It's actually supply, but we'll call it resistance level, okay? Notice on the 1 minute time frame how price starts to slow down. Look at the significant highs and how they decrease. So there's a high, then we get a big move up, then another high, big move up, and then notice how everything starts to slow down. There's the high, there's the next high, there's the next high. Everything starts to slow down. Everyone starts taking profit at this level, right? Now, do we know if this 1 hour time frame resistance is going to hold? No, we want to see the institutions play the money. We want to see the institutions put the money on the table, drive price down, and we can go, yes, the institutions are back in the market now and we're going to profit from it, okay? We don't want to be taking trades here. If you take trades here, this is where manipulation happens. This is where you're going to get stopped out. You're going to take buys, sells, whatever happens right now, you're getting took out. Because right now, you've got retail buying here, and you've got retail perhaps selling here. Okay, so price is literally just going to manipulate like this here. Okay, what I want to see is a big sell-off happening. Okay, so again, I'm just going to, here we go here. Okay, slow it down here. I'll take it back to the 1 minute time frame. Okay, so we go back to the 1 minute here. I'll go back here. Now again, See now, if we go back to the 1 minute, see how we start to create lower highs. See that lower high there, see the lower high there, see the lower high there, there's the previous high, there's the previous high. We're slowing down at this level. There's the previous low, there's the new low, there's the new low, right? We're going into a downtrend. But I do not want to be taking trades here. What I want to be doing is marking up this level here, okay? Because this is the previous high on the 1 minute time frame. This level here is literally this resistance area on the this resistance on the 1 minute is this resistance on the 1 hour. Okay, so I'm not going to be taking trades here, right? What I'm looking for is price to come back up to this level, retouch it, then drop, then create a lower high, and then bang, we are in a trade. So let me give you an example of what I mean. Okay, so keep an eye on it here. Now, let's see what happens here. Okay, right. Okay, here we go here. So what we've got now is a big sell-off on Euro USD. So this is that big sell-off happening here. Okay, there's the previous low. We've got a big move down. Notice the big move down now. Okay, we've literally gone sideways, slowly slowing down, bang. Big move down. Now I'm not going to take a sell trade here, because what happens when you get a big move down is you'll get a pullback. Okay, so I'm looking for a pullback around to this area here. Okay, around this area just here. Okay, the reason being is because the closer to this resistance area, the better. Okay, if I actually load up the binary destroyer here, I've probably got a Mogwai signal at the top. Okay, yeah, I have. Look, I've got a Mogwai signal right at the top here, but we're not trading the binary destroyer. That's cheating. Okay, so let's go back to price action. But what I'm looking for is a possible retouch. Let's see what happens. Right, let's see what happens. Okay, so let's go back to the charts here. I'll zoom out here. There we go there. Where's my simulator? Okay, so price, we now got a big sell-off here. We now got a big sell-off. Euro USD is now selling off. Institutions will start coming into play. As price starts pulling down here, we are going to get a pullback. It is a given, we will get a pullback. Okay, and that pullback has to be a lower high. There's the previous high. So whatever lower high we create that is lower than this one, we are entering a trade. Okay, so you see what we're doing now? I'm lining up two time frames together. Euro USD on the 1 hour is telling me to sell at the resistance. The 1 minute is telling me to sell, but I'm waiting for a lower high, because remember, price moves in structure. Lower high, lower low, lower high, lower low, lower high. Okay, so let's see what happens. Okay, so we're gonna see price pulling back. This is where, again, look, I'm just gonna pause it. This is where traders start entering the market, panicking, or, oh my God, I'm missing the setup down. I'm missing the setup down. Be patient, okay? Wait for the pullback. Wait for the retest. Trust me, okay? You will profit a lot more. Okay, bang. See if price starts to pull back. Okay, there isn't no structure here. So again, the nearest pullback zone is just here. Okay, this is where the pullback zone is here. Okay, so let's keep an eye on it. Okay, so again, a lot of traders are getting took out here, aren't they? Right, they got into the trade too early, they're getting eager, they're keen, and they're getting stopped out. Okay, price is just reversing because everyone starts selling at the top, they profit, you know, it is what it is, right? So price comes, let's see what happens here. Okay, so price now breaks this resistance area here, so we could possibly go into an uptrend, right? And this is now where everyone's panicking, right? Keep an eye on what's happening now. Okay, so we've now broken structure to the upside, and now a lot of traders are perhaps going, well, this is an uptrend, this is an uptrend, I want to be buying here. So I took a sell here and I got stopped out, so I'm now going to take a sell here instead, and I'm getting stopped out as well. So I know I'll take a buy instead because we're above structure. Okay, now watch what happens, right? Like I said, I don't really know what actually happens, to be honest with you. I know price drops on the 1 hour. I don't know what it looks like on the 1 minute. Okay, so price comes up. Now notice I'm looking, keep an eye on the one hour, right? Keep an eye on the 1 hour, okay? So price is pulling up, okay? And everybody that is selling is being took out here, right? Okay, bang. We might... I'm just seeing what happens here. We might be entering a trade just now. Let's see what happens. Okay, let's see if we touch it. Okay, here we go here. This is that big sell-off here. This is, remember, right? This looks messy. See how this looks messy on the 1 minute? Okay, and this is the downside of trading the 1 minute, is it can look very messy. Okay, I'm just waiting for a lower high to happen. Okay, here we go here. Here we go here. Here we come up to this level here. Okay, and I'm gonna enter a trade. We come back up. Okay, let me get a sell off here. I'm just waiting. I'm waiting. Where's that pullback? Come on, give me that pullback. Give me that pullback. Give me the pullback. Yes. Come on. Yes. There. Okay. Right. This is where I enter the market here. Just here. This is where I'm entering. Okay. Now, again, I'm going to cover it more detail. But look what happens right now. Okay. We had a sell-off at this level here. Okay. Which is the 1 hour resistance. We know that. The institutions came into play and drove price down. Drove price down quite a lot, didn't they? Now that tells me, right, okay, institutions are now coming back into play. I'm happy with that one. Okay, they played the hand. I've waited for price to come all the way back up, okay, because this is the pullback, okay, and then price has then retouched it, come down again and retouched it here. Okay, so this is a nice little break and retouch to the downside. We'll probably do something like this here. Like I said, I don't actually know if this is going to happen. Okay. Now what I'm going to do is I'm going to take a trade. I'm going to put my stop loss of 10 pips. So I'll give you an example here. We're going for a 10 pip stop loss, and we'll go with a 150 pip take profit. Okay, which is where is that 150 pips? Okay, it's down here. Okay, it's down here. Okay, that's good. Okay, optimistic on this one. So we've gone for a 10 pip stop loss and a 150 pip take profit. Remember, we're on the 1 hour time frame. The institutions are still in play here. This is still a lower high. This is still a downward momentum. Let's see what happens. Okay, so I hope this trade wins. I'll do it on the 1 hour. Okay, so here we go here. Price starts to pull down, which is great. Okay, we pull back slightly. Okay, we pull up. Yes. Now this is where I would start taking profit just here, because first target on this move has been happened. We've come straight down to this level. So are we going to break this low? This is the point that we need to ask ourselves now. Remember, how do you get a downtrend? A trend down, pullback, downtrend. Have we got a new low being formed here? Not at the minute, because we are stalling at this support line here. Okay, so let's see what happens. We pull back. Okay, like I said, this is probably, let's see what happens. If I lose this, oh, there we go there, bang. So you can see the real difference now on what's happened, right? Institutions are coming to play. We already knew that, because on the 1 hour time frame that was telling us. Now, if we go back to the 1 minute, okay, can you see, where was that sell off? Here we go here. That big move down. Look what happened here as price come down, and this is what I want to teach you, right? We can see this happening all the time, right? Look at all the lower highs and lower lows. So there's one there's one here, there's one here as well. Okay, and again we've got one here. Okay, and again all along this is lining up perfectly with the 1 hour resistance. We've got a sell off. Price comes down, creates a lower high, lower low. Price pulls up, you sell again. Price chops around for a bit, eventually breaks it, creates a new low. Price pulls back to this resistance. Price comes down again. We sell it. And again, price comes all the way down. Then, remember what I said, on the 1 minute time frame, we've now got this upward trend movement. Okay, now we know this means nothing. In reality, this is nothing. What we want to be doing is selling here. Right, this is where we sell, because we drive price down. Remember what I said. Okay, we don't just take sells here. Now this is a significant part as well, is notice here again exactly what I said. Okay, we had a big sell-off here. Institutions played their hand. We wait for the pullback. Price pulls back up right into this level here, which lines up perfectly with this area here. That was where that resistance got broken. That was the previous low. So price comes up, bang. Price comes up into this level. We sell it. Price comes down. Yeah, right. It makes sense. So remember, one thing I want you to take note of now is always trade where the institutions are trading. Now, what we're going to do in the next video, in part two, is I'm going to tell you how we can profit from the small pullbacks in the market. So, give an example here. We have a trend down, we have a pullback, we have a trend down, we have a pullback. What I'm going to do is, obviously we know the institutions are going to get into play here because we know that the order flow is in a downward movement. We know that price is going to be driven down, but I'm going to start off by teaching you to profit from the upward move here. Okay, so once you know when to profit from the upward move here, you can literally think, right, that's it, I'm closing my position just here, I'm going to take a sell, whack, and profit from it. So yeah, I hope you enjoyed today's video. That's lesson 1 or part 1, and I will see you next week for part 2, where we will look to take trades against the trend. So yeah, see you in the next video.